Good morning, traders. This is Evelyn from Astra Montis, and I'm here to bring you the latest insights for the week of September 30th to October 4th, 2024. Let's dive into what to expect in the upcoming week. This week unfolds against a backdrop of rising speculation surrounding Federal Reserve rate cuts, as the dollar steadies following a recent 50 basis point reduction. With markets pricing in additional cuts for November and December, all eyes are set on the upcoming ISM PMIs and the highly anticipated non-farm payroll report, which may offer critical insights into the health of the U.S. economy. Meanwhile, in the Eurozone, preliminary inflation data will be pivotal for shaping expectations ahead of the European Central Bank's October meeting. As China prepares to release its PMIs, concerns linger regarding its economic recovery, adding further complexity to the global financial landscape. Investors face a week rich in potential catalysts that could steer market sentiment and policy outlooks. The dollar slipped following the Fed's 50 BPS rate cut and its signal for further cuts, but it traded steadily this week as markets priced in around 75 BPS worth of cuts for November and December. Fed funds futures suggest a 50% chance of another 50 BPS cut in November, despite policymakers like Christopher Waller and Neil Kashkari favoring slower reductions. Next week, investors will hear from several Fed officials, including Chair Powell on Monday. However, with the dotted plot already indicating the Fed's direction, focus may shift to incoming data, especially Friday's non-farm payrolls. Ahead of the payrolls, the ISM manufacturing and non-manufacturing PMIs for September, due on Tuesday and Thursday, will be closely watched for early signs of how the U.S. economy performed in Q3. If these numbers align with Fed Chair Powell's recent positive economic assessment, the dollar could strengthen as investors reassess the likelihood of further aggressive rate cuts. For the dollar to maintain its gains, Friday's jobs report must also show improvement. Forecasts predict 145K new jobs in September, slightly above August's 142K, with unemployment steady at 4.2%. Average hourly earnings are expected to slow to 0.3% M per M from 0.4%. While not groundbreaking, any positive surprises alongside solid ISM results and less dovish commentary from Fed officials could boost the dollar and cheer Wall Street, indicating a resilient U.S. economy. Focus in the Eurozone will be on the preliminary CPI data for September, due Tuesday. Despite no clear signal from ECB President Lagarde about an October rate cut, disappointing PMIs have increased market expectations of a 5 BPS reduction at the October 17th meeting to around 75%. A Reuters report highlighted that the decision remains open, with doves pushing for a cut after weak PMIs, while hawks advocate for a pause. A compromise could see rates held in October, but reduced in December if data doesn't improve. If the upcoming CPI data indicates further inflation slowdown, it could solidify expectations for rate cuts in both October and December. China will release its official PMIs for September on Monday. August's composite PMI was barely above the contraction threshold at 50.1, leaving uncertainty about whether business activity has improved or slipped into contraction. Despite the People's Bank of China announcing stimulus measures to support the economy and the troubled property sector, market response was tip-ID. Oil prices drop as concerns about supply disruptions ease, and Saudi Arabia signaled it abandoned might its $100 per barrel target. This suggests investors remain skeptical about China's demand recovery, believing more fiscal support is necessary. This week has been marked by significant economic developments worldwide, from speculation about further Federal Reserve rate cuts to pivotal inflation data in the Eurozone and critical PMIs from China. As investors digest the implications of the upcoming ISM figures and non-farm payrolls, the outlook for the U.S. dollar remains uncertain, with potential for both gains and losses depending on economic performance. With market expectations for ECB actions intensifying and global economic conditions in focus, the landscape remains dynamic and challenging. Stay informed as we continue to monitor these developments closely for their impact on markets and investors moving forward. To conclude, as we navigate through this week's trading landscape, it's essential to closely monitor these significant updates. We appreciate your confidence in our insights and wish you prosperous trading in the days ahead.